how did you come to be involved in the Pensions Commission? Could you just walk us through how you became involved?
Well, it was just about the last day in my office before Christmas, and I'd heard that the Green Paper had been published, so I knew there was going to be a Pensions Commission. Maybe they'd announced that Adair was going to chair it, and the phone rang, and it was setting up a call with the Secretary of State in Work and Pensions to ask if I'd joined the Commission. And I have to say, I rather assumed that there would be quite a number of people on it, so it was relatively easy to kind of start sounding pretty positive about it, because with several people you can hide in the corner. It was only during the conversation that I realised that there would only be three of us and there would be no chance to hide in the corner. And it also made very clear that this would be an unpaid post. I can't remember what that was, probably so that Nolan rules didn't apply or something.
Why were three people as a commission chosen, in contrast to so many other royal commissions in the past?
I don't know. I've often wondered whether there were just three people in the country who were acceptable to all the parties involved. But it worked. It actually worked very well as being a small commission. I mean, it meant that we worked very closely together on every piece of evidence, all the material we looked at, of which there was an enormous amount, and agreed word by word and line by line with everything that was in the report. So it was a rather different process from a big committee where, as an individual member, you can bang away at one particular issue, and then you have to accept the kind of judgment of others on things that you haven't been quite so involved in. In this case, it was very intensive.
And I mean, for some people, that is part of the reason why the Commission was so successful, was that there wasn't the opportunity to have sort of minority reports, a splitting of the Commission, and as a small group, you were able to work to come to a consensus yourselves before, as it were, trying to broach a wider consensus. Do you think that's right?
Yes, I think that is right. I think we could have been at loggerheads. I mean, it was, I think, partly because of the skill of Adair in setting up the structure and how compelling the evidence was, that it was actually really quite easy to come to agreement. I think there was nothing we came to blows over. There was nothing that was hard to agree. Partly because we'd worked so intensively, and we'd been imbued in all the material over quite a long period.
Now, your remit initially was rather narrow, to review private pensions, occupational pensions. How did it come to be that you expanded this remit to encompass basically a wholesale reform?
Well, certainly my reaction, and I think that of Adair and Jeannie, was in my very first conversation when that original call, was to say that you can't understand the incentives and structure of private pensions unless you take it in the context of state pensions. The structure of state pensions sets both the adequacy that people will have if they don't save extra, and it also sets the rules of means testing and taxation that affect to what extent it's worth their while making extra provision for retirement. So you actually logically couldn't understand private pension system without taking into account what was happening to the state pension system. And I discussed that in that first phone call, and the Secretary of State agreed that would have to be part of what we looked at. So you can't really separate the two. And so to answer the main question we were asked, we had to understand the whole system.
So just to stay for a minute on your ways of working, you had a dedicated team in the DWP supporting you. Obviously, that team had to be at some distance with the Commission for its independence from the department itself, I presume, and obviously from other government departments, the Treasury, Number 10 and so on. How did you go about having the capability to do all of that and doing it with the DWP?
Well, the government agreed to give us a good team, and we were really lucky in terms of the people who were in that team. It worked. We and they worked very well together. In fact, I kind of regarded us all as part of the same of the team, rather than there being a secretariat separate from us as commissioners. It was very much a joint effort. I thought the DWP were very impressive in keeping the the Chinese wall between what the team were doing, some of whom were on secondment from DWP, others were from elsewhere. They did for a while have offices outside DWP, but they very quickly established and government respected that they were working for the Commission and that the discussions we were having were within the team and within the group, rather than that they were reporting back offline to ministers separately.
And did you ever have any occasions where, you would find ministers asking, trying to ask you how your work was going?
We did through the process, and one of the things that marked the process was there was quite a lot of turnover of Secretaries of State while we were doing. I forget quite how many there were. There was also turnover in the pensions ministers. We kept people in touch with how the work was doing. And part of our thinking, part of our evidence gathering was done with officials from Number 10 and the Treasury and DWP there. So from that, to that extent, given that what we wrote we felt followed logically from the evidence, there shouldn't have been any surprises in what we were uncovering in terms of the scale of the problem that we were facing in the mid-2000s. And so I think enough would have been communicable back to the political side of things and more senior policy staff as to the direction this was all going in. So there was then a point when we, in terms of both our reports, when we broke, and then we had our meetings talking about lines of argument that were just within the Commission and our Secretariat. But that was based on the evidence that had been shared, including sessions where people came and explained precisely what the National Insurance Fund is and how it's invested notionally in notional gilts, with new notional gilts chosen every Friday afternoon. So that, all of that material with people coming in outside, as well as our public evidence sessions, were things that were part of what people are aware of. And I think that was very important in building not just the external consensus, but also building the understanding within Whitehall of what the constraints were, what the emerging problems were, and what the outlook was, which was in many ways much less favourable than government had thought, even as far as the Green Paper that set us up.
So let's just move then to that case for change before we get into the proposals the Commission made. So, by the late 1990s, early 2000s, the Labour government had implemented pretty much what it had kind of committed to: reduce pensioner poverty, to provide an income guarantee, to use means testing to bring down the high rates of pensioner poverty that were inherited from the 1980s. What is it that really made the kind of change argument compelling to move away from that framework into the framework that the Commission then adopted?
I think probably two things. One was the realisation that we were sliding to a system where state provision would be entirely means tested, with high rates of means testing, with most people drifting into means testing, making it very hard to make the argument that it would be, for a wide band of society, that there were big returns to putting money aside for retirement. It's hard to get people to put money aside for retirement in the first place, but when you're facing the level of withdrawal inherent in pension credit, even if people are not on housing benefit, that's a very big ask for most people, unless they start off on means-tested benefits and you've got deductibility of the contributions going in. So just the realisation and then modelling of the scale of how big those disincentives were going to be, as well as the understanding of how that was playing within the voluntary private system, but also a realisation that the system was drifting in a direction that was not going to save median savers very well. As we came in, there'd already been a bit of change, that ONS had been overestimating the aggregate scale of new pension saving in Britain through a really quite simple double counting error, which David Willits, to give him huge credit, had pointed out, that when people switch from one pension provider to another, we were counting the new contributions as if that was new saving. As the money moved over, we weren't counting the withdrawal as being pension dissaving. So the national accounts were greatly exaggerating how much pension saving was going on. And then when you looked at what we were heading for with a price-linked basic pension at the time, clearly the system was going to deliver very little in the long run relative to what would then be contemporary living standards for middle earners. And there would be strong disincentives for them to save more. And that created a series of problems, which then coupled with the ageing of the population. And part of the work was to talk through on what basis the Government Actuaries Department were making their forecasts of what was really going to happen to life expectancies in future, which were at the time very pessimistic in terms of assumptions about future mortality changes. Now, all of that meant that we were facing a larger pensioner population in the future and therefore greater costs than were built into many of the forecasts. So that led to this twin problem, that there was going to be a serious adequacy problem at the same time as the cost of the system would continue to increase as people spent a larger and larger proportion of their adult lives in retirement and over pension age.
Can you say just a little bit about the private side of things?
I think you have to go back a bit to understand the decline of defined benefit pensions, that their history was as a way of employers to lock people into staying with the knowledge they'd earned within their company or with the same employer, but also historically set up a system where where retirement could be invented, and it became easier to get rid of older workers as they became less productive, and that then later on interacts with age discrimination legislation. But the origins of pensions was a device to lock people into their employer, keep their specific knowledge with them, but then have a mechanism for moving them on as their productivity was assumed to be falling. The private sector greatly underestimated what was happening with mortality rates and longevity as well, and probably overestimated how the importance of pension provision in recruitment decisions. So, and then when you see stock market investment returns becoming disappointing through the 1990s and early 2000s, finance directors begin to wake up to the very large deficits that they were carrying within their pension funds, with the companies obligated to meet them, and doing this to provide both investment risk cover and longevity risk cover to their current employees, who probably did not quite understand how valuable those two things were, certainly when they were being recruited. So this was just, the private sector realised it had taken on very expensive risks, which it didn't need to, and therefore it fled from defined benefit and often took the opportunity to move originally new employees and then existing employees, but for their new contributions, to much less valuable defined contribution schemes, and therefore save money that way as well.
Can you say just a little bit about the process then of the Commission's work, and in particular the sort of industry perspectives?
Yeah, the lobbying or the pressure groups came from a variety of different directions. I mean, there's a number of people who were submitting evidence to us and coming to our evidence sessions were worried about adequacy. They were worried about the protection of existing retirees' rights. They were also not wanting employers to be given obligations they couldn't meet. But clearly, part of the interest was from the industry that didn't want to be given risks it couldn't cover, but at the same time wanted to see a segment of its market continuing. So there was a little bit of a balance there, reflecting, I think, just the balance of interests across the economy. And I think one of the reasons why the Commission worked was that we tried to make sure that we were talking to and getting information from a wide variety of different organisations, some of whom obviously have their own particular hobby horses or interests. And I think this is rather important, through the two-stage process of having an interim report a year before our final report, we were able to bring those different groups on board with what we saw the problem was, using the evidence we collected from them, but also from a wide variety of other kinds of source. And a lot of that was pretty unanswerable. And clearly, again, Adair's skill in presenting those kind of arguments and assembling the evidence made the logic of what we were doing really almost in the end unanswerable.
So the consensus that you achieved for the proposals was very firmly grounded in a kind of everybody having to buy into the analysis, that being critical to them buying into.
I think it helped enormously. So this was, we were, as we described it, putting forward, and we set it out early on, that we had these, faced with what we were facing with an ageing population, that there were these unpalatable choices. That either we had to accept that future pensioners would be poorer relative to the rest of society than they were today, and that Britain certainly was not and is not a generous country to its pensioners by comparison to many others, or we would have to save more, or we would have to pay higher taxes, or we would have to work longer. And there really was no escape from those. And I think the logic of that what we were looking for was a combination of those four ways to cope with aging, and with very little appetite for a decline in the relative living standards of pensioners, not just the poorest pensioners, which Labour had done an enormous amount, and you can see it in the statistics on pensioner poverty, had done an enormous amount to reduce pensioner poverty and stop it being old, being synonymous with being poor. But it was what was happening to people in the middle, and what was going to happen to middle earners that was really, as well as some of the groups left out of the better parts of the state pension system, that was the biggest concern. And so there was very little enthusiasm for saying that the first of those unpalatable choices would be a solution, and therefore you needed some combination of the other three. And the moment you said you needed some combination of the other three, then you have to start getting the incentives right, and you have to start using whatever behavioural mechanisms you've got to get the combination of the three that we put forward.
Can you just say something about how the Commission, as it were, brought the Labour movement and those elements of the Labour Party into the coalition of support behind your proposals?
Well, so there were two issues there. One was that earnings indexation of the basic state pension had been abolished after the 1979 election, and the restoration of its value to what it would have been, and then re-indexing it, was a key part of the very long 1983 Labour manifesto, famous long manifesto. And therefore, in the modernisation of Labour in the late 1980s, this is my interpretation of it, the removal of the commitment to restore the earnings-related value of the basic state pension was part of Labour displaying a new realism on the public finances. So I think that decision not to go back to earnings indexation was something that was very difficult for a Labour government, and certainly some parts of it, because it was all part of the modernisation process. So that was one side of it. The other side of it was we had these pension ages fixed since early on in the Second World War at 65 and 60, with women's state pension age slated to rise to match men's state pension age by the end of the 2010s. That was already in place, but still, what had happened over time was that people were spending a longer and longer part of their adult years in retirement, and that's just a very expensive choice. I mean, we'd moved from there being 4 years of working life to support each year in retirement to a situation where we were heading for 2 years of working life paying paying national insurance and taxes to pay for 1 year in retirement. That's a very tough proposition. If you're looking for any kind of reasonable replacement rate, that implies very high contributions one way or the other to get any kind of sensible replacement rate. And as things were, that was going to go on indefinitely. So the proposition we put forward was the flip side of that, was to say, well, let's change the logic of both of those in the other direction, so that the deal we can offer is a better pension at a later age. So it would have been much harder in many ways to sell just pension ages have got to go up because we're living longer, but to say this will go along with, as part of a settlement, with a pension that will give a more secure base in the long run, that will keep up with contemporary living standards, and then also on the sides, and by the way, it will be more worth saving, putting money aside, than it would have been under a fully means-tested system and the way we were heading for. That, it was putting all those things together. So having the twin problems, in a way, helped that there was then a combined solution, which wasn't all bad news.
Yeah. And so that effectively enabled the trade unions to come on side.
So it seemed, yes. So I think the realization that the way things were developing, the really difficult thing, I think, for the trade unions and other people who've got distributional concerns high in their mind, which certainly I do, is that the people who are most immediately affected by a rise in state pension age are the people who've got the shortest life expectancy. And because Britain has such huge class-related age life expectancies and mortality rates, that meant that proportionally, each time you go up, people who've spent their lives on lower incomes are losing more. They were the ones actually who gained most as the ages were frozen. But at the same time, it was in nobody's interest, and certainly not in the interests of that group of workers, for us to drift towards a situation where the basic provision became, I think somebody used the word nugatory, I can't remember who it was, but it became extremely low in relation, almost irrelevant in relation to contemporary living standards. So it would not have been in the interests of the people for whom a non-means tested basic pension, now the new state pension, would form the bedrock of their income in retirement. Letting that dwindle away in order to let people claim it at what became an earlier stage in their life cycle would not have been in their interest. And I think in the end that very difficult argument did carry with the trade union movement. And obviously, having the expertise of Jeannie Drake, who worked with the TUC on that, and understanding of what the trade-offs were, was very important. So that something else that was important within the Commission, although this is, it's not that anybody took particular partisan positions or we found great difficulty in agreeing a way forward, but having Adair's experience, having run the CBI and having Gina's experience from within the TUC, meant that we could have some of those discussions of what the important points were within the Commission, and then produce something that met, as best we could, those different perspectives.
I would like to ask you why a hard compulsion of auto enrollment was not on the table.
Yeah. Well, it's not that it wasn't on the table. In fact, it was in our remit, was to look at compulsion into private schemes of one kind or another. Two issues on that. One is, once you make it compulsory, it becomes essentially a tax.
Okay.
And if you're essentially producing a tax, why not just do it through the state system, rather than doing it through what, certainly at that point, were more expensive forms of saving? So the one side of it is, if you go for full compulsion, the logic, and some people have certainly argued this in response to our report, that actually, if that's the problem, then go for full compulsion, do it through the state, and just increase taxes. Obviously, the arguments against that in terms of how different people see the role of the state. But there's another side of it as well, which is that people's circumstances and needs are very varied. I mean, there are people who will inherit quite a lot. There are people who think they're not going to live very long. There are people who think they can rely on family members. There are people who have property that they think they can downsize as owner occupiers. And so having a system which is entirely one size fits all runs the danger that you set up benchmarks that are inadequate for most people, but are probably still suggesting over-saving for those who do actually, a minority, those who do actually have alternative forms. So soft auto-enrollment on the opt-out system creates a kind of compromise on that we get a lot further than people evidently were getting through the voluntary system, even with what were actually not very successful attempts through information to encourage people to save more, but does leave the opportunity for people to opt out. And that so far, but of course we haven't yet been talking about higher contribution rates, we don't yet have the evidence on that, we're talking in April 2019, has been more successful than we expected in terms of the rates at which people have stayed in. And that, in some ways, this is a triumph of behavioural economics. I think one of the things when we were talking to people about it that struck me most was that the House of Commons had for its staff a non-contributory, valuable, opt-in pension system, which some people didn't opt into. So it was entirely free, other than the signing of a letter for what one would have thought well-informed House of Commons staff to opt into it, but they didn't. And obviously that's just the tip of an iceberg of a much bigger provision, with a lot of lower paid workers not being covered because there was less interest to the providers, possibly less interest in the competitive labour market to the employers, with a lot of people being left uncovered by the existing system. And what we've seen so far through autumn is very low rates of opt-out. And we haven't yet seen any kind of systematic campaign to say, don't let them keep your money. One of the things that could have happened would have been a kind of, some populist newspapers could have decided to print opt-out vouchers if they thought that this was some kind of monstrous state system and low value scheme. So I think another side of it also, that leads on to how important it was to make sure that the default saving arrangements available could be good value for money and did involve lower charges than were happening through the private sector at the time we were looking at the problem.
Do you think this is the reason why this nudge theory or behavioral insights in policy, not only in pensions but also more generally in policy making, do you think this is the reason why it has been embraced by all political parties?
I don't think I can speak for other areas or why the behavioural insights team was set up, clearly now over time the apparent success of auto-enrolment is in some ways a poster child of behavioural economics, and it's a sort of bigger one than some of the others that are used to illustrate why behaviour matters. But there's been accumulating evidence across a number of different areas that even such simple things as the kind of letters, the reminders people get, and the wording of those will change people's behaviour, and there has been experimentation on that. And one of the legacies of the enthusiasm for evidence-based policy of the 1997 to 2010 government was that those experiments could take place and we could learn from that. And it turns out that there were wider lessons, that this is something that if you get it right, can get the right effects without getting the hostility and without having the one-size-fits-all approach that compulsion creates.
Another proposal, it was low earners or medium earners can enroll at a low cost. And as a result of this, we have today Nest.
Yeah.
Do you think that Nest serves this purpose today?
I was, and the Commission was, great enthusiasts for the establishment of Nest. I mean, if you did the calculations of what conventional private schemes were charging as a percentage of the capital value, and therefore, it would have been even more intense as a percentage of the return in a world we did not forecast. The post-crash low return world was not part of our calculations. But those very big chunks being taken out by annual charges made it very difficult to say we want to auto-enroll people into such expensive private schemes, which are expensive because they're dealing with very small amounts of money. It's all very well to run at low cost if you're dealing with a high earner putting a lot in. If you're dealing with intermittent earners, with low earners, the amount you're collecting each time is very small. So the logic of setting up Nest was to have a low-cost, simple system that people could move in and out of during their lives and pick up where they stopped. And I think that design has worked very well. I think my regret would be that Nest was not made a stronger default. I think in our vision of it, Nest would have been the default, rather than being more one competitor amongst others. So I think fewer people that have ended up with Nest than we probably envisaged when we modelled it. On the other hand, the effect of the existence of Nest and the competition from it, therefore creating a much more contestable market, bringing out alternative low-cost schemes and bringing down costs elsewhere. I haven't seen the latest numbers on costs elsewhere. I think has been favourable, even if people haven't ended up in Nest. It's meant that Nest's customer base and its cost base is smaller than we envisage, and therefore it's harder to spread the cost. But I think the model worked, and judgments were taken at a later stage as to precisely how the default would operate.
The one big change to policy that's taken place since then has been the pension freedoms reforms. I think you've written that you think that threatens the kind of framework created by the Commission, which has at its heart that you have security in retirement and security of income rather than freedom simply to spend what you've accumulated on. Can you say a bit more about that?
Well, having been through the really rather careful and long process of building consensus on the accumulation phase that we went through the Pensions Commission, and then governments in cross-party fashion continued before and after the 2010 election, with some tweaks and with some accelerations of the flat rating of the state pension brought in by Steve Webb and co after the 2010 election. That was a very impressive act of consensus building on the best way forward in a difficult situation, which current politicians in 2019 could have learnt from in other issues. It was therefore a very big surprise to hear in the budget the introduction of pension freedom on the decumulation phase. I mean, maybe that reflects, our remit was to look at the accumulation phase, and we were able to say some things about decumulation. Clearly, there was one of the effects of freezing expected retirement ages was that annuities were being taken at effectively an earlier and earlier age relative to people's life expectancies, and therefore were taking on far greater uncertainty in terms of what would happen in 30 years' time. And that's very expensive. And so an annuity in 2005 was, at the age of 65, was a very different proposition from an annuity at the age of 65 in 1955. So that market had become expensive, unattractive, obviously after the recession with low returns. The apparent value of annuities looked very poor. I think there could have been alternative default arrangements set up. I personally would have liked to have seen an arrangement where Nest provided some kind of default, or others provided some kind of default drawdown system that didn't annuitize until later on. But to then go for the big bang of saying you can pull all this money out, seems to me that it has destabilised the system. In some ways it makes it more attractive because people have got more control over their own money. But we know it's already led to people losing their money through swindles, and we know from international experience that there will be one group of people who draw down their pension too fast and will therefore be left just on the basic state minimum in retirement after they're 75 or 80. and longevity comes as a surprise to them. But on the other hand, I worry almost more about the group of people who are just going to hoard it and not use their retirement savings for their living in retirement, or even pass it on to the next generation, where there are very favourable rules that allow you to pass this on as a form of inheritance. So even if the money isn't used as a way of creating or augmenting the bank of mum and dad for house purchase for the next generation, it may be seen as being the most tax efficient form of saving. And we get another group of people who either are doing, if they're better off using it through that route, or just hold on to the money because you never know what might happen. And one of the things you never know might happen is, are you going to live to 100 or not? So it takes away that potential insurance, which we pay very heavily through tax relief to create. So I think it then sets up a whole new set of questions of why are we giving such valuable tax reliefs if we're not getting the obverse of that, which is a lock-in, not necessarily compulsory annuitisation at state pension age, but some kind of lock-in that these resources will be used for retirement. That's why we give tax reliefs. If we're not getting that advantage, and people are, even if they're not buying the famous Lamborghinis, are one way or another using it on cruises or their children very quickly, why was that something that's so tax privileged? So it unlocks some bigger arguments, I think, and makes one feel, well, having built this consensus of what things should look like through the accumulation phase, shouldn't we be having another go on at least setting up a sensible default mechanism, a sensible drawdown, and then a annuitisation system, again, that people can opt out of, rather than making it so easy for people to pull money out of, which is fine if they really, really want to, but is evidently open to swindlers and is evidently open to problems caused by the very myopia that leads us to want to have any kind of retirement pension system, saving system in the first place.
What is it that means that framework that you devised in much better times has survived when other parts of the welfare state haven't?
Well, I think there are two sides to that. One is we, despite the fact we look back over 100 years of stock market returns and all of that, we did not see the financial crisis coming, and I think there were many other people who did not see it coming.
Not alone in that. Yeah.
And we reported ahead of it. Now that's really had two very important effects. That one is that prospective long-term returns are much lower than we were expecting, and therefore to get any particular level of retirement income has become more expensive. You get less for your 8% contributions or whatever than we would have expected, although we allow for some degree of uncertainty. But the other thing that's happened by default is that moving to earnings indexation, let alone with the triple lock, has meant a step change upwards in the relative value of state pensions. And those two things, in some ways, in terms of meeting adequacy, have offset one another. So that in itself is possibly not such a bad outcome, given that we weren't starting with particularly adequate pensions. But this has gone alongside very large austerity as far as working age benefits are concerned, which, I mean, you can allocate, you can earmark one particular kind of saving for another, but the austerity on working age benefits has been matched by what one might describe as profligacy on reduction of income tax through the increase in the income tax allowances. So those two things produce a distributional trade-off between the better off half of the population and the worse off half of the population. But clearly holding to indexation of the state pension anchors people over pension age in a way that, particularly with cash frozen benefits, the minimum living standards for people working age are not. Now, I wouldn't see those two things as necessarily in opposition. I think they're different problems. Yes, we fixed the problem we had for retirement incomes, but we've created new problems for minimum incomes and living standards for people in the bottom half of the working age population. Now, however, that does not mean that the triple lock is a logical solution to the problem, because if you've got to the right relative level of the state pension, having the long-term ratchet that the triple lock creates is not a logical solution. I mean, it's a distant problem, and it depends, but it sets up an unstable situation. And then when you have these other pensioner benefits where the winter fuel payments, if you're worried about fuel poverty, would be much better directed at tackling the problems of fuel poverty at source through investment in energy efficiency than randomly spraying it to people over a particular age. And the same goes for some of the other free TV licenses and free bus passes and so on. And yet there is a dilemma there, which is that if you say, well, the solution is to means test the free TV license, or to means test the free bus passes, or to means test the winter fuel allowances, you're then back to the recreation of heavy means testing in old age that we set up the whole exercise to avoid. So there's a problem there. But the bottom line is precisely the political issue, that so far the rates at which pensioners have voted have been much higher than the rates at which younger people have voted. So there were some indications in the 2017 election that more attention was being paid to younger voters, and maybe some of the perceptions of the success of some of those will lead to a bit of a tweaking. But so far, pensioners as a bloc have acted much more successfully to get prime ministers and leaders of the opposition to promise to continue to freeze all the extras, or keep the extras in place, rather than, say, moving up the qualification age for winter fuel payments, or moving up the qualification age for the free TV licenses, which will be a way of literally grandfathering out some of these things. They haven't wanted to touch that because of the perceived electoral effects. And that's a very difficult piece of intergenerational politics in Britain, which is alongside what has been the biggest long-run effect of the recession, which is the way in which the people have paid the price, are people currently in their 20s and 30s, people born in the 1980s, who have lower wages, lower incomes than their predecessors did at the same age, despite growth. And so I think those things play into a much bigger problem of intergenerational imbalance than simply whether there should be free bus passes or free tube fares for people over a particular age.
Final question. Just looking at the British welfare state in an historical overview, one could argue that the Pension Commission reforms are sort of continuous with the kind of Beveridgean liberal welfare state. Would that be your view? I mean, if you
look at the structure of the state system, we've gone in 40 years from having a universal earnings-linked basic state pension of around 25% of median earnings, as left in 1979 by Labour, through a very circuitous route of introducing SERPs and then price linking of the basic pension, and then the post-pension commission reforms, and then Steve Webb's reforms. We've returned to a flat rate, pretty well universal, roughly 25% of median earnings state pension system, as not far from what Beveridge proposed. What's on top of the Beveridge model, though, is a commitment that state pension ages should move with life expectancy. And remember that means we should shave them down when we become less optimistic about life expectancy, as we are at the moment. But also with added auto-enrolment to build on top of that minimum. And I think that does add something to the Beveridge model. Effectively, this was a decision that was taken about 1957. I think that we could, 60 years ago, have moved towards a continental style, Swedish style, German style, earnings-related state pension system. We didn't do that. And by the time SERPs was introduced, started coming in the 1980s, it was too late, because it was not of interest to the middle and higher earners and their employers who had contracted out, to whom it was irrelevant. It therefore never really took. And the price of bringing it in was paid through the diminution of the value, the relative value of the basic state pension. So that didn't work. Nobody had willed the extra taxes to pay for SERPs when it was introduced, and it didn't have a big enough political constituency to stay in place. Of course, we're still paying for part of it, and that's one of the reasons why some pensioners are better off today than their predecessors would have been. But really that decision was taken in the late 1950s, that we set off in that different road. So yes, this is a piece absolutely of path dependency, that Britain in the 1950s went down one road. We tried to divert, and in the end we came back to the original Beveridgean road, but maybe with some additional enhancements that make it rather better suited for the modern world.